Welcome to another episode of Evolv. Today we're going to be talking about SME banking and how SMEs are the backbone of the economy and whether banks are truly meeting their needs. In today's podcast we have Adam, Conrad and George who are going to help us explore that topic and dive into it. So let's do the proper introductions. Adam Tarpey is the Head of Product Delivery at Metro Bank. Conrad Ford is the Chief Product and Strategy Officer at Allica Bank. Allica like Metallica. And George Dunning, the COO and founder of Bud, who is also a leading open banking provider. Welcome to you all. So together we're going to be diving into the biggest opportunity and challenges that face the SME market and the banks, how banks can leverage open source data, and the data insights that's going to drive as well. So let's kick off with probably the $1 million question and probably the easiest question of the day. Conrad, I'm going to come over to you. So why do SMEs feel so underserved?
Yeah, I mean, my starting point to answer that question would be, obviously SME can mean many things. We could chop and change SMEs on many dimensions, of course, age, sector, etc. I think in financial services, the most important one is size. And there's really two major categories within the SME population. So the first one is micro businesses. So in any major European economy, there's millions of micro businesses. These are typically one-person, two-person businesses. It's a person with a van, it's a freelance hairdresser, etc.
Yeah.
And then the other category, which typically is about 10% of the SME population, is the medium-sized businesses, those that employ typically 5 or 10 plus employees. Now, they're really quite different in their banking circumstances and their needs. And actually, you'll find that the micro businesses, generally speaking, are kind of okay with their banks. And the reason for that is really simple. They are so consumer-like in their banking needs and circumstances that they're pretty okay with being served on an infrastructure that's an operating model that's largely built for consumers. My favourite fun fact that underpins that is that the most popular form of finance for a micro business, which is used by 1.5 million of them in the UK, so a third in the UK, is a personal credit card. So, their funding needs are so small, it's buying a bit of stock for their newsagent every month. They can do it with a personal credit card. Why would you put yourself through the pain of a formal loan? So micro businesses are reasonably happy, and there's, of course, some really exciting innovations coming in that segment, like banking apps in which you can raise invoices, for example. But actually, when you hear about SMEs and pain with banking, you're typically really talking about the 10%, the 10% that are meaningful employers.
Yeah.
Now, the good news for us fintech innovators is that is by far the biggest part of the SME segment by value, whether you're looking at financial services revenue pool or segment of the economy. So in the UK, it's about a third of the economy, that kind of 500,000 medium-sized businesses. The bad news for the world is that is a major part of the economy. So if they cannot get banking, and particularly if they cannot get finance, it's actually really bad for the economy, and the UK is a case in point. So why does that middle sort of hundreds of thousands of businesses, the medium-sized businesses, really struggle? The reason is quite simple, because in banking terms, for the big incumbents, they're really awkward because they're too complex for the kind of simplistic, homogenous, high-volume consumer banking operating model, but they're too low value for what us bankers would call coverage, which is people in suits. And for that reason, they tend to get underserved. Most famously in lack of SME lending, but more recently challenges around KYC, anti-money laundering, etc. So fundamentally, it's that they're stuck in the middle. They're too low value, but they're too complex, and as a result, they're kind of structurally underserved. And actually, I mean, we believe that so strongly, we actually bet, that is the entire bet on which Allica is built, right? And has made us the fastest growing fintech in the UK so far. Because
you had to get it in, didn't you?
Had to get it in. Get it in. There's your soundbite. And it's because it's a large underserved area of the market, and it's really awkward for the incumbent banks.
How many SME customers do you have at Allica?
When you include those that have come through intermediaries, it's tens of thousands of those, hundreds of thousands. But those that have a main banking relationship with Allica, it's single-digit percentages of the overall market.
Yeah, and the reason those customers gravitated towards Allica rather than maybe one of the tier 1 high street banks, what's the feedback you're generally getting for those customers?
Well, generally speaking, they tend to be actually deeply unhappy with the incumbent banks. Now, that's not always the case. But generally speaking, depending on which bank you're with, there'll be a certain threshold. It's typically predominantly turnover-based, but a certain threshold below which you basically get lumped in with the consumer banking segment. And that is the primary indicator of satisfaction or lack of satisfaction, because suddenly You typically don't get a relationship manager. So when things go wrong, you get a call centre.
Yeah.
The next available relationship manager, as one of our big bank peers likes to use it as a euphemism. And you typically get dumbed-down banking, you get a lack of specialist lending products. So most of the big banks have been shutting down their specialist lending divisions, so financing of assets, equipment, receivables. So generally speaking, below a certain turnover threshold, it depends on the bank, by the way, but below a certain threshold, you get a dumbed-down banking service for what's quite a complex business. And I think from the perspective of the SME themselves, there's a certain point in your evolution where suddenly your business just becomes quite complex. And I personally say it's probably somewhere between 5 and 10 employees where suddenly you can't have what we say internally at Allica is suddenly it's no longer a single player bank account, it's a multi-player bank account. You want your credit controller to be able to check whether invoices have been paid, but you don't want them seeing salaries.
Yeah, of course,
you want your financial controllers to be able to raise payments, but not give the final sign-off. And you want to be able to do complex bulk payments rather than single one payments. So there's a certain point at which you become a multiplayer bank account, and that's when the traditional banking model breaks down because it's a consumer bank account they're trying to use for you.
Gotcha. Yeah. So in the blue corner we have Allica, and so in the red corner we have Metro. So actually throughout the COVID period, Metro did quite well in terms of obtaining a lot of SME accounts through some of the government schemes. I was there, so I know that. So how are Metro kind of dealing with I guess winning from maybe some of the banks that Conrad's mentioned? Same type of comments, feedback.
Yeah, look, very similar. I think, we're trying to understand and really kind of define what relationship banking and relationship management means in a digital age. We want to make sure that, kind of no matter the size of the business, they still have that optional choice in terms of whether they need a relationship manager. Now, naturally, sometimes that's going to cost more in terms of, account management fees, etc. But, some SMEs are very happy, just to have that digital only self-service kind of functionality. But again, the super important thing is you've got to be able to offer those services digitally to be able to offer that proposition. Otherwise, you're going to end up with a world where you're trying to do both, and that doesn't work. So again, obviously we're fairly unique in terms of we have the store presence up and down the UK. But again, we recognise that we can't keep opening stores up and down the country. We need to think about how we can expand to offer out our services and our products to everyone up and down the UK. And I think that's the next stage of the journey for Metro Bank. Yeah.
So going digital has got to be kind of music to your ears, right?
I mean, we've been harping on the drum of the fact that we think finance has been coming a long way for a while, but it's criminal how little financial data gets used. To be frank, if you look at kind of SMEs applying for loans and things like that, when Bud started, myself and Ed, my co-founder, we didn't have that much experience in finance. And then as we started to dig deeper, kind of what led us to what we are today is the fact that no one really uses transaction data, or so certainly 5 years ago nobody used transaction data. It was all statements, it was paper, digitization of that paper, but nobody actually digging into the data. And especially probably more so on the micro business side, at least, of going, well, hang on, I don't want to have to go get this statement over here and this statement over here and jump through 5-10 different hoops. You have my bank account, just reference my bank account and you can see that I'm worthy of being lent to. And I think that's what we've been kind of pushing the narrative of, both on kind of retail and SME, of just how can we actually access the financial data that people are generating on a, multiple times a day to paint a picture of who they are, to allow banks such as the ones represented today to make quick and easy decisions, rather than, and I still have it. I remember taking out a mortgage a couple of years ago, and it was, with my own banking app. I was in my banking app with all my transaction data and everything there, and go click to apply for a mortgage, just takes me to a stale page, which you're going, okay, fine, fill out all your salary information, fill out all your information there. And it's like, I was just there. I just had that on the digital app that you supply for me. Why can't you just port that data through? And it goes across every walk of life within finance. And, I know that it only becomes more complex as you get into SME banking, micro businesses, but also, as you expand that further and further, that financial data is representation of yourself. And, whether you tap into it from the bank account or whether you tap into it from the accounting system, we're just kind of supporting and advocating the flow and easy access of data to make these financial products easier to apply for, easier to get, and be more representative of the customers. Because to be frank, as a small business runner, jumping through these hurdles I just want to get access to the products. Jumping through the hoops to get to the products, it's a really important thing. Like it's very important that people are KYC, that AML checks happen, but it's only in the last few years that we've actually started to using the untapped resource of financial data that everybody sits on and is representative of either the business or the individual. So that's what we've been advocating for. It's a very difficult thing, but I think it has huge benefits for kind of both the SMEs, for consumers, and also the businesses giving the loans.
It's interesting because since the financial crash back in the early 2000s or mid 2000s, most people get multi-bank now. Most people are multi-banks, right? They spread their risk. So actually, your scenario there, you've been in your own bank, you're clicking through, expect to know everything about, as they should know everything about you. But for businesses that are multi-banked, actually using open banking to pull in the transaction from all those bank accounts to give you that full picture of the business performance is incredibly important.
Yeah, well, I also I think it's like the digitization of the world as well. Like I think when open banking came around, people were like, oh, now I can see all my bank accounts in one place. And that solves an issue. That has never been really a problem. Like I can open up my Amex and my NatWest like very easily, and like that's something. It's more around once you start combining that data and what you can do with it to understand the profile of that customer. That's where it becomes really powerful. But with the kind of digitization of all the financial products, now people are just naturally multi-bank because previously, it was really hard to go set up a bank account. I've had my NatWest account since I was, I think, 12. But now I have a Chase. Did
you get one of those little pigs?
I didn't get a little pig.
Oh, what's going on eBay now? You got to find that thing.
Yeah, I will have a look. But I've had my NatWest since I was 12. But now I have a Chase account. I have a Santander account. I have a Monzo account. Like, I will open up whatever works for me at the time. But then as your kind of finances disperse, like actually that requires more access to the data to be able to kind of push the things through. Because again, it becomes even more cumbersome to go, okay, I'm going to get a statement from over here and I'm going to get a statement from over here and I'm going to get a statement. You might as well have the data all flow around. And again, we're multi-banked as a business as well. We've got, our HSBC account in one place. We've got a Revolut account. We've got a Wise account. We've got a Brex account, depending on where we are. So actually understanding who we are as a business through one portal can be challenging, can be difficult, and just allowing the access to the data and understanding the analysis of that data for us presents an opportunity.
And a quick question, because I think, I guess the magic or, kind of the secret sauce between Bard and maybe some of your competitors is you've been able to do the categorization for businesses. Because obviously categorization of business data is more complex than retail. Can you maybe give us like an insight as to how you were able to kind of do that as a USP? Yeah,
for sure. So, I mean, we definitely treat business data differently to how we treat retail data. What we try and do is do kind of almost mini classifications and mini models based on like who they are as a business, whether they are kind of a micro business or a larger one, and what sort of industry they're in, and try and tailor the models based around that. But also, we have much simpler taxonomies at a business level than what we do at a retail level. Retail, I think to kind of play out your point to the people listening, the reason that the business transaction classification is so much more difficult than retail classification is because anybody going into Tesco and buying some stuff there, 99 times out of 100, they're going to say that's a groceries expenditure, or at least agree that's a groceries expenditure. They might have gone and bought electronics and be difficult, but they're going to say that's a grocery expenditure. 3 people from 3 different businesses could walk into the same shop and buy the exact same thing and rightly classify that as 3 different purchases. It could be cost of goods, it could be supplies, it could be a number of different things. So it's how do you kind of group around that? What we see in the US is people tend to go off the ledger data, the accounting data, but obviously that can be 30 days out of date at any one time. So we try and simplify it. We try and work, we will kind of map our taxonomy based on the lender that we're working with and what are the kind of, what are the risk models that they're looking for, and then do are matching around that and just try and simplify things so that we're meeting the purposes that our lenders want while trying to get the needs of the kind of client being processed correctly. But it is a challenge, for sure. It's absolutely a challenge. I think trying to kind of simplify it has definitely been an answer to a lot of the questions. We've got some happy SME customers using it, making lending decisions off the back of it, which has been great. But it was quite a learning experience for us because we went so far and so deep in retail that taking a little bit of a step back to solve a purpose there felt like we were moving backwards in some way. But you've got to acknowledge that, not to over engineer, and make sure that you're solving the problem for the customer and solving the problem for the client, versus just doing what is the most technically complex thing that you could be doing.
Yeah. So Adam, we got open banking is obviously one of the solutions to maybe some of the barriers that that banks have to overcome to better serve SMEs. Other than open banking, are there any other issues that maybe Metro or industry-wise, what are some of the barriers that are stopping SMEs being served in a way that we think is appropriate?
Yeah, look, I think there's probably three key barriers to call out for SMEs when accessing products in general. I think if you think about basic economic theory, like a bit of information failure, there is an overload these days of information out there. I think within retail there's a great lots of aggregator sites that can recommend products, but actually I think within the SME and smaller business kind of marketplace, I think accountants and kind of trusted partners do need a little bit more to kind of point businesses in the right direction.
Sure.
The second one I think is ease of access of switching. So, whilst, we have the current account switching service, there are still barriers to switching to banks and other financial institutions, and it gets amplified the more complex a business becomes, of course, the number of directors, etc. Yeah. And then I think the third point is not choice of product. I think there's a lot of financial institutions out there that have good choices and range of products. I think it's quality and price. So when you look at, things about price, pick something simple like a savings account, SMEs could be getting, a better service in terms of rate. You look at Allica, I think it's like 4.5% roughly versus HSBC, which is like 1.6. Have we got automatic sweeping in place for their accounts to make their money work harder? And then obviously you've got the quality in terms of ease of use, UI, UX, which again, you need the tech infrastructure to do, and prioritization of that type of kind of roadmap. But I think there are three key things that kind of are stopping SMEs getting the choice of all different types of products.
Adding on the savings side, because we've done some research on this. So SMEs in the UK are losing out on about £9 billion a year of interest. And it's money that's either sitting in non-interest bearing accounts or sitting with a big bank who pays miserly interest. Now, interestingly, SME savings are actually more attractive from a bank's perspective than, say, corporate savings. But corporates don't get ripped off. The difference is really fundamental. It's really simple. The corporates have a treasurer whose job it is to beat up the banks and to work the money.
Yep.
And as you've alluded to, right, there's a real power and potential in something that actually works effectively as works alongside a virtual CFO type offering. Because that's the problem statement really. If you're running a business with, say, a dozen employees, right, you are a generalist, not a specialist, and there's zero chance you can afford to have a full-time CFO, let alone a treasurer.
Yeah.
So if you're lucky, you may have a fractional CFO or a good external accountant, but the reality is, how do you actually bring to bear the power of having that specialist without the £250,000 a year salary? Yeah. I think is a really interesting problem statement and one I've been thinking about a lot.
I think that's, but kind of to the other point, I think that's why you see people will prioritize a good digital experience over the best financial products necessarily. Like, I think that's in all walks of life with finances, because, as we all should know, most people don't want to deal with finances. Like, whether you're in a business or whether you're a consumer or whatever, it's if you can make it easier, I'll take a 0.5% hit on a savings account if I can do it right now, versus if you make me jump through 10 hoops to get there, I'm more likely to drop off, to you're more likely to see attrition. And I think that, to be frank, that's why the challenger banks kind of have risen.
The ease of use. Like, if I can sign up in a couple of minutes and get my money in there, I'll take that over taking 2 days, 3 days, a week to be verified, even though my money's going to work harder. To be honest, I don't even necessarily think that's because I like the nicer UX. I think having a better digital experience allows the customer to feel more in control,
because like I know if I'm doing it immediately, well, I know I can switch it out. I know I can do this. But as soon as you get into like, you've got to send off this letter, you've got to do this, you've got to do that, there is a lack of control that you have as a business, as anyone, because, well, if this takes 10 days to do, then what does it take to shut down? What does it take to switch it over? What does it take to do everything? Whereas, you know, if I'm calling out Chase just because they did very well in the UK, it's like I can get set up there in a day, get the money in, I can transfer it out whenever I want. I feel in control of that, and it's the digital experience that allows for that. So it is interesting that like the interest wars are always fun to watch. It's always fun to watch how
you just want the deposits to make the most of it, right?
Yeah, well, I mean, it's fun to watch how like when the CMA 9 will blink, if you know what I mean, as far as watching the interest rates move and going, no, we'll just stay where we are. We'll just stay where we are and hope our clients aren't noticing. And then it's eventually, like, oh no, we're losing everyone now because you actually have respectable players that are meeting the market rates. And the bigger players deciding, actually, no, I'm just going to stick at 0% for as long as I can.
I would just add, by the way, the kind of epicenter of poor service in our world is actually not on the savings side, it's on the lending side, and specifically lending against commercial property.
Yeah.
So for those that don't know, although in our world we get really excited about digital lending to SMEs, right? That's a tiny part of the market. So there's about £250 billion of lending to SMEs in the UK right now. A few billion is the bit that everyone gets excited about at fintech conferences. It's like less than 5%. The core, about 2/3, is lending against commercial properties, so factories, warehouses, etc., to mid-sized businesses. Now, get this: the incumbent major banks will very often, typically, in fact, take many, many weeks to even give you a decision as to whether to lend. Now, if you break down the steps, right, of what's happening there, right, there's probably about a few hours of actual things going on. The rest of it is just silence, nothing happening.
Yeah.
And it gets almost Kafkaesque, by the way, because they sit on the decision for a month.
Yep.
And then they finally get around to looking at it and they say, we haven't got up-to-date information. It's like, well, it's because you've sat on it for a month, right? I mean, it
did last month.
It's pure Kafka. Now, we are, I'm a startup founder by background, and we're all told that we have to 10x the incumbents to win, right? Yeah. I've come to believe you don't have to 10x, right? You have to multiple x them, but not 10x them. But this is one where you can 10x them, right? You know, if they're taking 6 weeks to make a decision, right? Yeah. It's a pretty low bar to 10x that.
Yeah.
And this has real consequences, right? Because very often you've got a situation where, you know, you've got a business, let's say they're on a small town, out of town estate, right? Mm-hmm. And they've been growing successfully. They had a good COVID because they're in logistics, and they desperately want a bigger warehouse, right? They can't get a warehouse on the other side of the country, right? They're a local regional logistics firm. They are waiting for that thing to come onto the market. It comes onto the market, they need to act quickly, right? Yeah. This has real consequences for growth. So, the great tragedy is that they don't look elsewhere, right? Yeah. Because you know, we're not the only one. You would solve this too, right? The reality is there is no excuse for taking weeks to do things, right? The incumbents do because they can.
Yeah. I think I look at that lending journey, and you say you break it down into the segments. So it's the RM gathering information, and a lot of it is going to be stuff that Open Bank can solve. It's going to be financials. It's going to be bank statements. It's going to be MI. It's going to be forecasts. We're sitting there analysing it. They have to put a credit paper together, and then it goes off to credit underwriter who do, funny enough, the MI, the audit accounts. They basically redo this stuff again because they don't trust the RM, and they have to re-underwrite it. That process takes days, if not weeks. I'm probably being nice. And I think even in some of my old shops, you're talking 90 to 100 days was about the average to have kind of gone from point one to money in the account. 100 days. And if you're waiting, maybe an auction, 30-day completion period, how can you possibly do that? So actually, where are those pain points along that lending journey? Can digitalisation, technology start taking that mundane away and speeding up the time to money? Yeah, Open banking is going to be clear for that. I mean, you must be integrated into both the customer journey and the banker journey. Yeah,
I mean, normally what you do is you integrate into the banker journey so that they can then automate a send out to the customer sort of thing. So like, you know, you are in the lending journey we're selling into the bankers, and then the bankers make it part of their journey for the customer, if you know what I mean. So they'll embed a specific widget, but then that's all going back into a dashboard or via an API into the banker view for them to get that information, how easily then they then port that between different sectors of the business. We can only go so far. We make it easily accessible.
Sure.
Yeah. But that being said, to your point, it doesn't. I will kind of be transparent and say open banking doesn't solve everything. There are nuances.
Absolutely.
To especially in lending, especially about things against property and things like that. You're not going to be able to garner the value of the property with open banking. What you can do is get a really good sense of if it is representative of the client, of the customer. You can get a really good sense of their affordability. Can they afford this loan on a do they have the incomings and outgoings?
Yeah.
But you definitely will need supplementary information as far as what is the asset, like what are you lending against, is there depreciation, is there appreciation, etc. So what we'll always look to, where we see ourselves as oil to the machine, if you know what I mean. And to be honest, it's been a very rusty machine for a long time, but it isn't dynamically changing the machine. It's just improving it so that data can flow, so that people can make quicker decisions and people can make better decisions. I think is a really important part. Like quickness is a key part to it, but also getting approval rates up, denying bad loans as well. We with a lot of the clients that we work with, we get loan stacking to near zero for them as well, because if they're pushing all via open banking, you can immediately see if somebody's trying to do something like a loan stack against their account. And so you can really reduce the fraud rate on that. But yeah, I will say, I'm also an advocate of comparing apples to apples and being transparent of look, this is what it'll do, but let's not act like it will solve every single problem within a journey. It is a specific use case that will really help. But as we know, kind of in finance, everywhere along the journey does need help. And anything you can do to speed up those approval processes is material.
You've started to adopt some open banking at Metro, and you have as well at Allica. So are you still in this phase of testing, seeing if it's working, or are you actually starting to see some results?
So, I mean, look, from my side, we're not trying to make it instant decisioning for all kind of SME lending. Essentially, you kind of touched on there, it's about accuracy of decision making, trying to give that underwriter internally all of the decision points and data points they didn't previously have, either from an accuracy perspective or speed perspective. Yeah. Essentially, we want to speed it up as quickly as possible, but to make the right decision at the end of it. It's not like retail lending where it's a straight through journey, or there's even with open banking referral journey, you can still almost make it almost instant. It's about making it as quick as possible and as accurate as possible. We partnered with a company recently called Covector. It's an AI kind of agentic.
They've been on the pod.
Yeah, exactly. That's why they were giving them a shout out. And they are really helping the credit memo process. It's taking it from days to kind of minutes. And again, we're using that to assist the process rather than dictate a decision straight up, which is then fed back to the customer. But that's from Metro Bank side.
Yeah, I mean, just something we haven't touched on is in the UK, we love to whinge, and we love to whinge about our policymakers.
Four men in a room whinging. It's the new name of the podcast.
But there is actually an example where a regulator in the UK did something quite amazing. In this case, our competition regulator, the Competition and Markets Authority. So they came up with a competition remedy, which is that through credit reference agencies, what they call designated credit reference agency, in other words, they have a special status. Sharing of current account data happens through the credit reference agency. Now, to be clear, this is not transaction level, so you can't do the superpowers, the hyperpowers of categorization, for example. But what you can get is a relatively up-to-date view of the overall cash balances and movements in and out of a given SME. Yeah. So it's kind of like an aggregated view, but it's a real and validated view. For most types of lending to SMEs, certainly to established SMEs where we would play, both of us would play, that is more than enough, right? Because the historic issue was always you were looking at filed company accounts, which could be as much as 12 months out of date. In other words, it was really driving by the rearview mirror. We would be unlikely to want to lend let a business buy a premises, for example, if they weren't even sure if they could make the next 2 weeks, right, on cash flow. So that's an enormously powerful thing. So it takes us a very long way. I think the power of open banking, and this would also be true of accounting data as well, because we haven't talked about tapping into cloud accounting data as well. ERP data is on the working capital or cash flow lending side. So the vast majority of lending in value terms is secured on assets or on property, so trucks, machinery, warehouses. but actually in volume terms, about half of lending is working capital or cash flow. And I think that's kind of the killer app for open banking and ERP data, because it is around understanding the live performance of the business, but also the trends. Yeah. So many businesses are up and down month by month. So you make payroll, you're low on cash, and then it builds up again.
Yeah.
Hotels in this country, we have a miserable winter, for those that don't know. So generally speaking, our hotels' darkest period will be about March, right? The Christmas trading period is long gone. They're waiting for people to come back to the beaches.
Yeah.
So they have a seasonal thing, and equally a shop has to buy lots of stock before Christmas and doesn't sell it until December.
Yeah.
So you can spot those trends and look at the transactional stuff and do the we haven't talked about categorization enough, because the interesting thing about categorization of open banking data is that you can effectively stress test. So in other words, there's certain costs that are variable. So in other words, you take the leap of faith, an established business run by the person who founded it is that's an intelligent person and they know what they're doing. So they will take what we'd call management actions. So in other words, if trading is bad, they'll reduce the variable costs. But certain costs are very hard to reduce. Mm-hmm. Long-term staff, your premises, etc.
Yeah.
So through categorization, you can begin to stress test it. Mm-hmm. Is another great use case, I think, of that data.
So we've got FI, we've got MI, we've got open banking, transactional data, we've got, quite right, accounting data. So you've got this wealth of data now streams that's coming into banks to enable them to make fast decisions, speed to money, all that kind of stuff. But is there an adoption issue?
Yeah, I mean, I think it's not necessarily an adoption issue from
the customer.
From a customer, like we see that customers will go, especially in the lending, by far, like, you know, just to give kind of some statistics, like if you're just asking a consumer or business to connect their bank account against a banking app just to get a better experience, you're looking at 10, 15, max kind of 20% conversion rate. Mm-hmm. Do that against a lending process, 80 to 90%.
That's because they want the loan, right? They're going to do what they need.
It's because they're incentivized.
Yeah.
They're just like, if this makes my life easier to get a loan, if this is what I'm going to do to get a loan, yeah, of course I'm going to do it. If this is going to make my experience better, sure, maybe if I need it. But on the lending side, yeah, you get 80 to 90% conversion rates that we see. So definitely not an adoption rate for an adoption problem from a consumer side of things, whether that be a retail or business consumer. Mm-hmm. But from a client side of things, yeah, I mean, you know, we're talking to two forward-thinking businesses today, but you're talking about changing key revenue lines within a bank, and even just changing the data that is reviewed for those revenue lines is a huge overhaul for those systems. So there's a lot of convincing you have to do as far as like, no, this genuinely will make these processes better. These will make it faster. You will gain more revenue. You will reduce costs. Mm-hmm. That you have to show everything is perfect before people kind of take a look at it, because, you know, finance is an old school kind of industry, to be frank, and kind of convincing people to go outside of their risk models as they are today. It's not necessarily that people are afraid of new technology. It's afraid of trying to make something better and you harm someone, or you harm a business, you make the wrong decision. And so trying to change a model is a very difficult thing to convince.
I would just add to that, by the way, the incumbents, I should get it's a very sweeping statement, but they don't have a technology problem, they have a cultural problem, right? Mm-hmm. Their approach to everything, they think that you can solve technology by writing PowerPoint slides, right? You know, nothing was ever achieved in technology by writing PowerPoint slides. It was only ever and will ever be achieved by writing software code. So if you look at the setup of their sort of product development, or transformation as they love to call it, transformation is one of those sort of tells, isn't it? The more people use the word transformation, the less they're actually going to transform anything. But they are going to write really good slides about it. So you look at the setup of their product development. They have layer after layer of mental managers writing documents, having meetings and writing PowerPoint. Yeah. At the bottom of the chain is the people who actually write the software code, usually outsourced, by the way. It needs to be the other way around, right? Things only get done in technology by writing software code. So it's a cultural issue. It's not a technical one. Putting the oil in the machine, in the rusty machine, as you put it, they literally just need to learn how to put the oil in, right?
No, yeah, for sure. I mean, and to be honest, most people are incentivized within those institutions to do a project, make it look as shiny as possible, and then go, haven't we done a great job? Now let's shut it down, sort of thing. Like, wasn't that innovative of us to do that new thing? Let's now shut it down and go back to what we were doing before. Like, genuinely, like, I would say 9 teams out of 10 in banks, when they're looking at new software, like, that's almost how they look at it. It's just like, let's make ourselves look really good, but let's not actually change anything, because if we do and it goes wrong, we're getting fired. And like, people basically they don't want to put their necks on the line. No one wants to put their necks on the line. And again, that's a cultural thing of like, okay, try a new thing. Like, it shouldn't be try a new thing, and if it goes slightly wrong, you're going to get penalized for that. It should be, what do we learn from that, and how do we fix it, and how do we put safeguards in place? And like you say, we like to complain, but we do have good regulators that try and put, sandboxes in place, in places that we can explore technologies, so that, like, you're not going to get chased after if you do it right. But yeah, people are incentivized to kind of make shiny innovation projects versus actually implement.
Yeah, I mean, true story. I there's one of the big incumbents, and they have hundreds of people sitting there doing a manual process that one of our 8-person product development squads could automate in a few weeks, right? One of their innovation team, so the people in the WeWorks. But yeah, you can picture it, beard, t-shirt, right? I saw them at a conference, and they were explaining, and I'm not making this up, they'd built a branch in the metaverse. It's like, what problem are you solving there, right? It's like, just, and now
usually Minecraft or something.
But now they're all focused on, they've stuck people in WeWork to focus on AI. It's like, you haven't done the basics of automating your core processes. Fix that, right?
Yeah. I mean, you brought up a good point. The regulator earlier on, they've set up Sandbox, and they're trying to progress in this world of both AI and open banking. But playing devil advocate, to change those models you refer to probably needs regulatory approval. Right, and to get regulatory approval is probably, no doubt, I mean, you talk about PowerPoint decks, I can, God forbid how many PowerPoint decks they've got to do, but probably takes months, if not a year, to do. So as much as the regulator are providing the tools to enable it, maybe they've got to play their part as well.
Yeah, I think they do, but I also think, you commit to something and the regulator will work with you. Like, it's sometimes, walking through a blind maze sometimes with the regulator. They like to tell you as little as they possibly can while you're going through a certain process, especially to kind of like bigger banks. But they've set out consumer duty. Nothing is more consumer duty centric than looking at the data of the customer and going, okay, can you definitely afford this? Is this actually worthwhile? So it lines up with, you can stand behind that as a regulator. I am doing what you asked for by utilizing the data that's available to me. So I think it works with the regulations, to be honest. And like I say, we're not actually talking about using a brand new data set that's never been used before. You're using a data set that is based on you as a bank, the financial data that you already have. It's just pushing it into the places that it should be before. It's just changing a paper statement or whatever else, digital statement, into kind of actual full flow of data. You have to be confident in those systems, but often you're talking to the bank that the data's coming from in the first place. So they should just be able to get access to it.
And I'll just add to that, by the way, you're never replacing the model. You're always improving the model, right? I mean, just bear in mind, I mean, whenever neobanks have really got it wrong in lending, it's when they've looked at how it's currently done, which is, let's be blunt, is built on existing credit scores, right? External credit scores, and said we can do it better. You don't do it better than credit reference agencies. You build on top of it. You look for an incremental advantage. And you're a case in point. So you never go into the regulator and say, hey, we come up with a completely different way of lending, right? Now, you might have a new product where it's kind of like, we're going to sandbox it, pilot with 100 customers. But in the core of your business, you're just incrementally adding capabilities is what you're doing.
That's like one of our most successful lending clients, Fintern. They're also called Abound on the consumer side of things. But they take we're going to do CRA and open banking checks for every single one of our customers. Like, it's not we do have some clients that go, we got little data from the CRA, so then now we're going to do an open banking check. Well, they've taken a stance of, even if we're getting enough data from the CRA, we're also going to do an open banking check, because that actually gives us more holistic information about the customer that we're serving, and we can make a better decision. And the metrics are through the roof. Like, they're going, okay, just more data is a better way to serve the customer. And I think that's just an approach that it makes sense. And like I say, it is building on a model rather than, you're not rebuilding the wheel. There is a reason that CRAs have existed, and that quick access to lending information makes complete sense. It's actually, can you create a better picture with more data that's available to you, which is now possible with open banking.
And yeah, I think, maybe it's that first step for, for incumbent banks thinking about, that SME data. Can we put, huge subsections of data into a sandbox environment that's obfuscated, so they can kind of, obviously within the retail space, it's easier to kind of get that huge retro data in advance, build a new credit risk strategy on top of it. But I guess with SME data, especially within incumbents, it's obviously fragmented around, and therefore it's harder to kind of almost do the proof point up front. I think that's maybe the challenge for the regulator to think about how we can kind of get some of that data up front for these credit risk teams to be able to give themselves comfort ahead of going into it, and also having the infrastructure from a technology perspective to have all that data of transactions data is huge.
I will say as well, though, that the opportunity, I completely agree with you. The opportunity that you do have on the SME side of things versus the retail one, though, is that you can, to be honest, ask an SME to jump through a lot more hoops. Like, they're a lot more engaged and willing to go, like, I will do a multi-step process, like whether that's I'll connect 3 or 4 of my banks. In the retail, you can ask them to connect 1 or 2 sort of thing, but
go off elsewhere.
Exactly. Like, I'm not going to jump through that many. I will jump through a hoop, but not that many. But on the SME side of things, you can ask them to do quite a lot. Like, you should make it as easy as possible for them, but they are that bit more committed, they're a bit more involved.
Conrad, you mentioned the forbidden word earlier on, AI, so it's pound in the swear jar. But as you brought it up, we talked about open banking, talked about ERP. AI it's not even the next best thing, because it's been out there for a couple of years now. We've spoken about it on stage before. But so is Allica now starting to look at how AI can start to play in that SME banking space? I know Metro have already announced some AI initiatives, which we'll get onto in a second. But is Allica?
Yeah, it's really interesting, actually, because our world of SME lending, as we're going to violently agree, I'm sure, is ripe for it, but not in a really sexy way, right? In actually quite a boring way, but it is, for the current state of this technology, it is about as perfect a use as it's going to find. So let me just unpick that a bit. SME lending, and I'm talking about the core of SME lending against vehicles, trucks, warehouses.
Yeah.
It did digitalize over the last 10 years, but it digitalized to PDF, right? So 10 years ago, people were sending letters and faxes, right? And they were doing wet signatures.
Yeah.
And over the last 10 years, it's moved on to PDFs. And e-signatures really took off during COVID for obvious reasons.
Yeah.
But actually, there's so many different participants. There's the dealer selling a truck, or there's the solicitor doing a property transaction, or the valuer. They moved on to PDF, right? And whether we like it or not, that's the world that they use, right? And they're not ready. They wouldn't know what an API is, let alone use one. So it did digitalize, but not in the way that we would think about it as fintechers. Now that is actually a great use case for generative AI, because if the problem statement is, so let's work through a real example. You're lending against a business that's trying to buy a warehouse, and it's well within your risk tolerances. So it's well within loan to value, cash flow, affordability, etc. So you're not going to spend an enormous amount of time reading a 40-page survey, right? You just want to know there isn't Japanese knotweed, right? But there's really 2 data points you're looking for: the value that the valuer has put on it, and the EPC rating, the energy performance rating. So in a loan that should sail through without touching the sides, scrolling through that piece of paper is actually a really wasteful thing for a professional underwriter to do. Yeah. So actually the use case of making yourself more productive and efficient in a PDF world is a very good use case for that technology at this point in time. Just as it's taken off in accounts payable, because it's very good at reading invoices, for example. Yeah. And it gets constantly more accurate, and eventually it's more accurate than the human being doing it who might have an off day. So in the most boring way possible, it is that we happen to find ourselves in the kind of killer app for this. And it's really about, everyone can see that. The question is who executes fastest and best, basically. It's I'm hardly a genius for pointing out the fact that PDFs are inefficient, eh? Yeah. So it's about execution, really. Yeah. So yes, we consider it to be important, and yes, we've got stuff going on. But, it's not the kind of like, it's not like, Terminator's going to be making risk decisions for us and by Christmas. This is actually quite a boring use case, but a very interesting one from an efficiency perspective.
We brought up James Cameron, the Terminator, in a previous podcast around AI. So, but Metro have announced very recently their partnership with Covector.
Yep.
That's a really cool use case.
Fantastic. Yeah, and we got it live really quickly. The guys at Covect have done a great job in terms of demoing it, and a lot of buy-in internally. Sometimes that is half the challenge.
Goes back to culture.
Exactly.
Yeah.
It goes back to showing how powerful it is.
Yeah.
Again, it's a build versus buy kind of decision. Again, with all these type of really kind of deeply ingrained kind of AI tools, sometimes when you think about LLM models and AI, it requires constant supervision of the models, and therefore that's not something you want to do in house because it's going to be super expensive to run, and obviously the infrastructure with regards to data. So I think going back to Conrad's point, unstructured data, being able to read it, summarize it, super powerful. I think that's stage one. Seeing some great results going into minutes, and then again advising the underwriters to be able to make a decision. There's much more use cases we can roll out across the bank, and then obviously we have a couple of other applications, live chat, etc., where you can kind of start to see other use cases as well. But we've started there, seeing great success, and it's a building block.
Yeah, fantastic. I take it for your business at Bud, AI is gonna power it even more.
I mean, yeah. So from what I can see, like there's loads of applications of AI in finance. We seem to be the people that are trying to push actual use of AI on financial data, because like I say, most of the applications of AI in finance is on operational data or like reading documents, etc. Whereas what we're trying to do is everything that we've done with transaction data. And what we found is everything we've done with transaction data actually allows us to give customer context to generative AI LLMs, so that we can create really unique experiences both on the consumer side but also on the employee side. So, be able to give one thing that got very good reaction earlier this year is intelligent search. So being able to like search your transactions, but also get a generative prompt against that. So I don't know, type in Netflix, will tell you how much you've spent on Netflix and also how much that went up in the last couple of months, or how much you're saving on a monthly basis, or etc. But also layering that out onto the business side of things, we have a portfolio analytics tool called Drive, which is looking at all the transaction data across the bank and allowing anyone in the bank to dive into it and understand what the performance of the bank is, what the competitive products used on the bank is. We have a generative chatbot on top of that, so even if you're not a data analyst, you can just dive in and go, okay, find me, if a bank employee can go in and go find me customers using a competitive credit card with no BNPL exposure, as an example. It'll then pull back all of those customers, and then you can push that into a segment, you can push that into a CRM, etc. So for us, it's actually everything that we wanted to build at Bud, but it's just a nice timing and everything.
It's a truly agentic kind of AI in that.
Yeah. So really kind of marrying all the work that we've done to date with some of the latest technology and creating kind of truly agentic experiences. So, and our clients seem to be loving it as well. So it's a really exciting time. On that, it just so happened that, the combination of the tools that we built to date and the new wave technology that's come out have really married together to create kind of, some cool experiences.
Look, the time's ticking away, fellas. So I guess we better wrap up with a final question to you all. So looking ahead, I'll start with you, Conrad. Looking ahead for maybe the next 3 to 5 years of SME banking, and everything we've talked about today, the sources, the open banking sources, the data analytics, potentially AI around that. Where do you see the future?
So certainly in the UK market, I mean, they would deny this, but the data is really clear on this. We are seeing basically the big incumbent banks effectively leaving the market, the core of the market, the established SMEs. So a data point there, just to bring it to life, is the big incumbent banks, after the global financial crisis, would have been doing like 70-80% of lending to SMEs. They're now down to 40%. So in a decade, they've become, they're no longer the dominant player, right? The dominant player is challenger banks, specialist banks like ourselves. So I expect to see a continuation of that trend. And I think that there's kind of a macro picture here, which is that I think we are seeing the end of the era of universal banks. So there's sort of big banks that are all things to all people and every step of the value chain. They only existed because you wanted to cut cost coverage of the branch infrastructure. As branch usage declines over time, and it's obviously declining over time, I think you're going to see the emergence of specialist banks. So API-based utility banks and vertical banks on particular sectors.
Yeah.
And in our case, we're very focused on that established SME segment. So I think you're going to see the emergence of the specialist and challenger banks being the dominant players in the market. But I think SME is probably the segment that goes first.
Lucky that's the one you're concentrating on.
Well,
how ironic, yeah.
But the data is clear, right?
Yeah,
I mean, let's
absolutely,
face it, residential mortgages is still the domain of the big incumbent banks, right? So the data would suggest that we're correct.
Yeah, good for you. Adam?
So I think within SME lending, I think the one I've talked about before is around, kind of revenue-based repayments. Obviously thinking about different kind of hospitality is the example we talked about earlier. Repaying varies depending on, kind of your revenue that's coming in. I think the interesting one though, looking ahead, and I've seen a bit of research on this, is around how we can move a little bit away from traditional asset finance, in terms of warehouses, lorries, and thinking about more IP-backed lending. So thinking about how, businesses who have a lot of IP kind of value, Bud, great example, how they can use that type of asset to be able to kind of use its collateral for lending, and how companies and finance lenders out there can kind of really value that. I think there's a lot of way to go there. Obviously, it's a complicated world in terms of how you start to value those IP.
Absolutely.
Obviously, kind of equity rounds do something similar, but I think that's an interesting place that people are going to play in next.
And as the only non-bank panelist today,
I mean, it's not what I'm going to say is nothing new, to be honest. I think you're going to see that players such as the ones that we're talking to today, that the use of data and kind of being ahead of the market as far as new technology and applications are going to be what win out, essentially. I think the incumbents are moving too slowly, and the ones that are moving try to build everything themselves, to be honest, and that plays against them. And I think the ones that are nimble, that aren't acknowledge what they should buy versus what they should build, and take a kind of open mindset, whether it's to utilization of data, kind of open API rails, but also the application of AI when it's done right. They're the ones that are going to win ahead. And I think the applications and the value they can create for the consumer is then going to be what they can offer back, which is going to then double down as far as their advantage against the incumbents. You've already called out statistics against what you're going to see in the market. I think that's just going to move faster rather than hit a saturation point. I'm really interested to see how those statistics play out in every walk of life of lending as well, though. Because I think, as you say, mortgages is ripe for disruption as well. Like, that hasn't really, apart from some of the brokers doing a good job on UI, like, it hasn't really changed a lot in the last kind of 10 years or so. So I think it's a very interesting time. I do think AI is probably going to change things more than open data. I think the combination of the two is going to change a lot.
Powerful, yeah.
But I think you'll see a more dramatic change with the utilization of AI than you will. The adoption of open banking has been slow and steady. So I think that's just starting to become ingrained, but I think you'll see a much kind of bigger step change with the application of AI and how dramatic that can be to operational efficiencies. I think people will wake up to kind of it will seem like overnight the kind of how dramatic a change that'll.
And of course, in the next few years, you're going to open a bank account with both Metro and Allica, because I did notice you didn't mention their names earlier on when you talked about bank accounts.
I mean,
slightly awkward, but
we don't take a lot of debt, to be honest.
No, they're all for balances.
We don't take
for balances.
We don't take a lot of debt, and we've got a fair few bank accounts, but I'll talk to my finance team.
And when we get back, then we can truly do a comment. You can actually say who is better, Metro. And let these two duke it out.
That'll be the next podcast in the other room.
Yeah.
Like I said, I mean, we're more kind of venture debt than traditional debt. So
sounds like excuses to me.
Yeah.
No, look, we've come to a conclusion, guys. So thank you all for your time, insights, your comments today. Always good to get. What do we say the new name of the pod was going to be? Four whingy old men, was it?
Boring men and a beer.
Yeah. So I'd implore everybody to check out Bud. George has done a great job over there as founder, and Adam's doing fantastic things over at Metro. Want to see that Covector partnership blossom and future use cases, and obviously Conrad has turned up without his usual red trousers today, which is fantastic for the lighting. But look, it's always great to have you guys on, and appreciate your time, and we'll see you down the road. Thank you.
Thank you.
Thank you.